Your bank is praying you never see 5 zeros in your savings account. Not because they're worried about you, because the second you hit $20,000, their entire profit extraction machine shuts down. I'm Connor, and look, I'm telling you this because 60% of Americans are trapped below this threshold right now. And it's not an accident. Your bank doesn't want you bankrupt. That's messy. That's unprofitable. They want you broke enough to keep bleeding fees, broke enough to need their predatory products, broke enough to stay desperate. And there's one specific number that flips the entire game. Today, I'm showing you why $20,000 is the kill switch that transforms you from their ATM into their nightmare. Let me paint you the reality of life below the line. You're constantly running calculations in your head. Can I afford gas and groceries this week? If I pay this bill now, will my rent check bounce? How many days until payday? Every unexpected expense becomes a 5-alarm crisis. Car repair, full panic mode. Medical bill, complete meltdown. Refrigerator dies, you're looking at a financial catastrophe. You're one bad month away from credit card debt spiraling, one job loss away from complete disaster, one unlucky break away from a hole that takes years to climb out of. This isn't living, this is survival mode. And here's what nobody tells you. There's a threshold where all of this changes, a number where the constant stress finally drops, where emergencies become annoying inconveniences instead of life-ending events, where you finally have room to breathe. That number is $20,000, not $100,000, not $50,000. Just $20,000 sitting in a savings account changes almost everything about your financial existence. Here's Connor's rule of $20,000. This is roughly 4 to 6 months of expenses for most people. That's a real emergency fund, not that pathetic $1,000 starter fund everyone pretends is adequate. A real one. With $20,000, you can handle almost any single emergency without going into debt. Car breaks down? Handled. Job loss? You've got months of runway to find something new. Medical surprise? Stressful, sure, but manageable. You stop living in constant fear. That low-level anxiety that's been running in the background since you became an adult finally quiets down. You can actually sleep at night without your brain doing financial gymnastics at 3 a.m. But here's the part that's really interesting, and this is what they don't want you to know. When you cross $20,000, you become unprofitable for your bank, and they absolutely hate that. Let me explain the 5 ways banks are running institutional extraction on regular people every single day. Last year alone, banks pulled $7.7 billion, billion with a B, in overdraft fees. That money came from people who didn't have enough in their accounts to cover a payment. Your account dips $5 below zero, that's a $35 fee. You just paid $35 for being broke. And if multiple payments try to clear while you're negative, multiple executions. I've seen people get hammered with $100 in overdraft fees in a single day. But when you have $20,000 in savings, you never overdraft, ever. That buffer means you always have coverage. The bank makes 0 overdraft fees from you. They hate that. Second way they drain you, desperation products. When you're broke and need money fast, your options are violence. Payday loans with 400% interest, title loans that can literally take your car, personal loans with criminal rates, credit cards with 29% APR. Banks and lenders are obsessed with desperate people. Desperate people pay premium prices for money. They don't shop around, they don't negotiate, they just need cash now, and they'll pay whatever it costs. But when you have $20,000, you're never desperate. Need $2,000 for an emergency? You just transfer it from savings. No loan, no interest, no fees, no profit for anyone. They really hate that. Third extraction point, credit card interest. The average American with credit card debt pays over $1,000 a year in interest. That's $1,000 to the bank for literally nothing. People below the $20,000 threshold carry balances because they can't pay the full statement. They use credit cards as emergency funds. They pay minimums and watch interest pile up like compound interest in reverse. But when you have $20,000, you pay your credit card in full every single month. You use their card, you collect their rewards, and you pay 0 interest. The credit card industry has an actual name for people like this. They call you a deadbeat. Seriously, that's the term they use internally because you're using their product without being profitable. They want you in debt, not debt-free with a fat liquidity shield protecting you. Fourth way, account fees. Many banks charge monthly maintenance fees on checking accounts, but they waive them if you maintain a minimum balance, usually $1,500 or $5,000, or sometimes higher. People below $20,000 can't maintain those minimums consistently. They're living paycheck to paycheck. Money comes in and goes right back out. So they pay $12 or $15 a month just to have an account. That's $150 a year to store your own money. They're literally charging you for the privilege of holding your cash. But with $20,000, you easily clear any minimum balance requirement. No monthly fees, no maintenance charges. Another revenue stream just dried up. Fifth and most insidious extraction method, emotional decisions. This is psychological warfare, but it's real. When you're financially stressed, you make terrible decisions. You buy things impulsively because you need a dopamine hit to cope. You take bad deals because you don't have time to shop around. You say yes to high-interest financing because you need the thing right now. Stressed people are profitable people. They're easier to upsell, easier to pressure, easier to squeeze for every last dollar. But when you have $20,000, you make decisions calmly. You can walk away from bad deals. You can wait for sales. You can negotiate. You can say no. That financial cushion doesn't just protect you from emergencies. It protects you from your own stress responses. It gives you the mental space to think clearly about money instead of operating in constant panic mode. Let me tell you about the brain shift that happens at $20,000. Below that number, you're operating from scarcity brain. Every single decision is about survival. Can I afford this? What if something goes wrong? I better not risk it. Scarcity brain is exhausting. It's constantly running calculations in the background. It's always worried about the next disaster. It doesn't let you take chances or think long-term because you're too busy putting out fires. Above $20,000, you start operating from abundance brain. Not billionaire abundance, just basic breathing room abundance. You can take the slightly lower paying job that has better growth potential. You can walk away from the toxic workplace because you have a cushion. You can negotiate harder because you don't need this specific deal right now. Every opportunity changes when you have options, and $20,000 gives you options. Here's a real example of what I'm talking about. Let's say your boss is treating you like garbage. You know you should leave, but you're living paycheck to paycheck. With $0 in savings, you're trapped. You have to take the abuse because you can't afford even one missed paycheck. Your boss knows this. They can treat you however they want because you have no leverage. With $20,000 in savings, you can walk out today if you need to. You have months of runway to find something better. Your boss's power over you just evaporated. Same job, same terrible boss, completely different dynamic because you built your liquidity shield. This applies to everything: car buying, apartment hunting, salary negotiations, business opportunities. When you're broke, everyone has leverage over you. When you have $20,000, you have leverage over them. So how do you actually get to $20,000? Look, I know it sounds impossible if you're starting from zero, or worse, if you're starting from debt. But let me break down Connor's battle plan. First, find the gap. Look at your income and expenses. Is there any gap at all? Even $100 a month? That's your starting point. If there's no gap, you need to either cut expenses or increase income. There's no magic trick here, just math. Second, automate your savings. The day you get paid, money should automatically move to savings before you see it, before you can spend it. $50, $100, whatever you can manage. Make it invisible. Third, treat it like a bill. Your savings contribution isn't optional. It's not what's left over at the end of the month. It's a bill you pay to yourself first, as mandatory as rent. Fourth, use windfalls wisely. Tax refund, bonus, gift money, that goes straight to the $20,000 goal. Not to a new thing, not to a trip, to the goal. Fifth, cut one thing that doesn't matter. You have at least one subscription or expense you don't actually care about. Find it, cut it, redirect that money. Let's say you can save $400 a month. That's $4,800 a year. In just over 4 years, you're at $20,000. Yeah, it sounds slow, but those 4 years are going to pass anyway. You can arrive at 34 years old with $20,000 in the bank, or you can arrive at 34 exactly where you are right now. And here's the thing. Once you start, the momentum builds. You get obsessed with watching that number grow. You find more ways to save. You get a raise and actually keep it instead of inflating your lifestyle. Most people who commit to this hit $20,000 faster than they expected because they start seeing money differently. And once you're there, everything changes. The stress drops. The options multiply. The bank stops making money on you. You go from being their product to being their customer, from being exploited to being served. Look, $20,000 is not the finish line. It's not retirement money. It's not generational wealth, but it is the first real milestone where the game changes. Below $20,000, you're playing defense, just trying to survive, reacting to emergencies, getting squeezed by fees and interest and desperation. Above $20,000, you can finally play offense. Build wealth, take calculated risks, make decisions from strength instead of fear. Your bank built their entire business model on people staying below this line. They profit from your stress, your emergencies, your desperation. Every dollar you add to that savings account is a dollar they can't extract from you in fees and interest. Every step toward $20,000 is a step away from being their ideal customer. Make them hate you. Get to $20,000. Build your liquidity shield. Achieve financial sovereignty. If this video showed you why that first $20,000 matters so much, hit that subscribe button right now. I drop videos every week breaking down the money strategies that actually change your life, not the garbage advice that keeps you trapped. Comment below and tell me where you are on the journey to $20,000. What's your current number? Let's track your progress together. All right, go build that shield. I'll see you in the next one.